Hello and welcome back to my YouTube channel. In this video, I'm trying to decode the derivative data of all the participants based on their open interest as on Tuesday, March the 21st. And before I go into the detail of that, today we saw a good recovery, a good bounce back in the last 2 hours of trading. And let's see how the data is now looking from everyone's perspective. Has it changed? Do we see short covering? Do we see anything getting better or worse with Fed coming up with their FOMC meet tomorrow night our time? So let's start with the index futures. It was a very nominal change for the bearishness, very nominal from them, but the ratio still remains bad. So this extreme end is still held by them. There's been very little change. In the breakup, we can see that they did some covering in Nifty, but they've gone more short in the bank Nifty today. So this is the scenario out here right now. So more weakness from their point of view is taking place in bank Nifty today. In fact, when bank Nifty yesterday had made a higher low, while Nifty made a lower low, today they've done the opposite of that. In spite of that, they've given up. So maybe this is some more of profit booking could have been taking place out here from the FII desk in bank Nifty. Overall flattish day. Domestic institutions did buy a little bit of quantity. At the same time, domestic institutions shorted a lot of stocks. So what we were seeing yesterday in short covering from the domestic institution could have been March settlement they were covering, and today they could have been shorting the April settlement going forward out here. There is no change from the DII in the stock options or the index options at all. Now let's have a look at the prop desk and the clients, what they have done in futures. Prop desk again shorted. So they had just covered the shorts for 2 days. They've gone back to shorting again. Good quantity shorts by the prop desk today, while clients continue to buy. Every day they come, every day they buy. So they've added more on the rise. Usually we see clients adding on the decline. Today we are seeing clients adding on the rise, which is interesting to note out here. Now in the options, in the index, this was very scary yesterday, 1 for 3. Again, very close to the extreme ends, which we have seen as per past data. Today they've brought it down to 1 for 1.75, which is good news. In one day, the entire scene has looks heavily changed. Now, what is important out here to see is that they have bought index calls. Okay. They have not done short covering that much. They have bought. So that's a large quantity of naked index call buying happening from the FIIs. This series, next expiry, next, we don't know that, but it's a decent quantity gone long out here today. At the same time, we see them shorting a huge quantity of puts out here. So again, very bullish from an immediate perspective. We can see that there is a change of stand from the FII overnight in a 250-point rally today in the index. So good scene happening out there. But when we see this, that the FIIs are turning mildly bullish or slowly turning bullish, we see the prop desk and the clients after a very long time, both of them having the same, excuse me, outlook for this week's expiry. The prop desk have reduced their bearishness in the call to an extent, but they still remain bearish. You can see a large quantity of shorts from them still in the system. And if you look at what they did today, they did an unwinding of 1 lakh odd calls and covering of 2 lakh call short. So this could be a large percentage of call spread getting unwinded with the expiry just 2 days away and a Fed meet. So they're booking profits, those who have done the trade maybe on Monday or a day before, something like that. So they're covering their trades out here in that move, and also some considerable short covering as naked people have also covered that trade. While in the client segment, who were extremely bullish in the decline on Monday, have turned bearish. for the expiry. So again, we see a large quantity of calls melting out here. So this is calls which must be far out of the money, which have melted very badly, where they have taken a exit, and those who must have written near the money calls have also scampered and closed today. Today we saw 17,000, 17,100, 17,200, seeing a lot of covering in the calls. So we can say that a large part of the call covering which has happened from the prop desk and the clients uh, together out here. So, but going forward, the uh, clients are also not very bullish on the expiry as of today's close. Both of them not so bullish on the expiry. When we look at the put side also, while the FIIs reduce their uh, bearishness, the prop desk has also done the same thing. They have added a lot of put shots also. So the prop desk feels that this expiry, in spite of the event on Thursday, Wednesday night our time, and the impact will come on Thursday morning, the event at least tomorrow. For tomorrow, the day could be sideways, not giving too much on either side. Maybe that's why they are short on both the legs in almost equal quantity. The clients who are extremely bullish at a 4 lakh plus put short have got it down today. So the clients on one hand feel the upside is not much. The downside also they have reduced their bearishness. So there have been some profit booking, you can say, today by them, or some have covered their losses because in the spike which happened from yesterday second half till today, the puts have melted, so they've got some relief. Those who had done it smartly towards the lows have got done some profit booking out there. But both prop and client don't see a major move at least happening tomorrow from both the sides. But both of them have covered both the downsides at the same time. We'll see tomorrow close how they both change their scenarios, or do they carry the same position again. In the options from the FII desk, we can see they were net buyers in almost both Bank Nifty, more in Bank Nifty, considerable amount of buying out here from them, net buying. Today was Fin Nifty expiry, so this is a lot of uh, strikes which have expired today. So this data can be very deceiving from that point of view. Uh, in the stock futures, we can see a decent quantity. FII is back into the buying after that scary selling for 2 days. Good short covering, good longs added also from them, but good part is the short covering part. So at least back to 50,000 now. So if we see at least one more day of follow through buying by the FIIs and short covering by the FIIs, we would then say that yes, there is the FII bearishness tone is slightly lower now from that angle. We need at least one day follow through, because what we have seen from the recent data, whatever they buy, this then again give it away in the next 2 3 days in a row. So follow through very important here from the FII desk. The prop desk has shorted stocks and even done a long unwinding out here. So these were the people who were bullish all throughout, have reduced their bullish exposure. Same goes with clients. So for after a long time, we are seeing props and clients doing the same thing almost in index options and in stock futures, while the FIIs stand out apart from everyone out here. In the stock calls and stock puts, again, we can see significant amount of shorts done by the FIIs out here because of the settlement is just a week away. So they must be, because of the longs they have taken in stocks and short covering they have done in stocks. They must be they have probably gone with the short call scenario to hedge their positions like that for full decay towards the end of the month, or you never know, this could be next month also where premiums are very high. But then in all cases they have taken some short strategies out there. Very nominal change from them on the put side in stocks. While after a long time, we are seeing a vice versa of what pros and clients do. Pros have taken a bullish route today. Clients have taken the bearish route. Now, this could also be read as squaring off. They were heavily short on calls. They have covered those calls, which have virtually melted down to negligible amounts, while the clients who had a lot of long calls have seen them decay to nothing and exited. Similarly, out here we've seen put additions by the prop desk trying to take advantage. They feel that this could be a move where the puts will melt to zero as the premiums could be high, and they feel the market won't fall that much, stock specific, while clients have bought puts quite a large quantity. Normally, we see the opposite happening out here. Now, for tomorrow, on the eve of the Fed event, the Nifty resistance comes in at 17,175 and above that at 17,300. While the support comes in at 17,050 and below that at 16,950. For Bank Nifty, the resistance is at 40,200 and above that at 4,500, while the support comes in at 39,700, below that 39,500. That's the tight range I'm looking at for tomorrow based on what the data is showing and how the market has moved today. Because normally pre-event, there is not too much of an activity, even though there's a lot of debate. There will not be a rate cut, there will be a rate cut. So let's not get into that. Let's look at how the data is showing up. With that, I end today's video. I hope it's of help to you. Please don't forget to like, share, and subscribe to the channel. Bye bye.